Hey everybody, Carlos here. It is that time of the year. It is open enrollment again. We need to get together and figure out what the game plan is going to be for 2019. I'm making this short video so that you understand my thought process. Hopefully you get a little bit of a head start on what you want to do for 2019. What you're going to want to do is watch this video, take some notes, jot down some questions, and we'll tackle those questions when we get together again for our appointment. At the end of the video, somewhere on my webpage, there's going to be a link to set up an hour appointment. It is a circus around this time. Everybody's trying to figure out their health insurance, so I need to keep organized. I need to get people on my schedule, so the sooner you can do it, the better. Gives us more of a jump start, more of a cushion just in case something goes awry, okay? But let's talk about a little bit about open enrollment first so we understand again. Open enrollment is every year from November 1st through December 15th. During this time period, somebody who has an Affordable Care Act plan has to renew the policy, or if somebody wants to get an Affordable Care Act plan, they can get a policy during this time period, okay? If we do not get an Affordable Care Act plan during this time period, then they're going to close the door on us hard. We're not going to be able to open it up again until the end of next year, okay? If we enroll in Obamacare or ACA plan during this time period, then all these plans have an effective date of January 1. Okay, so we're meddling around. We're trying to figure out what we can do during this time period for an effective date January 1. Okay, again, if you miss this window of opportunity, then the only time we can get onto one of these Affordable Care Act plans outside of open enrollment is if you experience a qualifying life event, and that usually means losing insurance through a different source in some way, shape, or form. Like I lost insurance through a divorce, or I lost insurance through my employer, or I got kicked off of Medicaid, whatever the case may be. Other things may be that trigger a qualifying life event would be a child was born, something like that. Or I got married to somebody who had an Affordable Care Act plan, or also known as an Obamacare plan, okay? Again, there are alternatives to Obamacare, and that's usually the route that most people are going with, but we'll talk about that more in detail here in a second. And those plans we can purchase all year round, and the reason why we can purchase them all year round is because the only way we can get them is if we answer some medical questions. So it's based on your health. So as long as we can get through some medical questions, then they'll happily give us the plan. But we'll talk about that more here in a second. Okay. So what are your options? As always, we have ACA plans, Obamacare plans. We have short-term medical plans. We have indemnity or fixed benefit plans. And we also have, one of my favorites is the minimum essential coverage plans, or we can do some sort of combination of either one of these options. And that's what most people are doing. But again, we're going to get more into that here in detail. So what's an Affordable Care Act plan? Why would somebody want to get on one of these plans? The number one thing is the Affordable Care Act plans, they give you coverage for all pre-existing conditions. So if we're dealing with some gnarly pre-existing condition, then sometimes we have no choice. We have to go with an Obamacare plan, okay? Sometimes if you have a pre-existing condition but it's not that serious, maybe it's controlled with a very generic medication that doesn't cost us an arm and a leg, and you're okay without having coverage for that pre-existing, then the alternatives might be okay. But number one thing is that Affordable Care Acts cover pre-existing conditions, okay? The next thing is it covers maternity. If we plan on having a kid, if we're pregnant at the moment, we need to jump on an Affordable Care Act plan, okay? We have no choice there. Also, if we're dealing with some mental health issues and we need to see our counselor, our therapist, our psychiatrist, we need to jump on an Affordable Care Act plan, because those are the ones that are going to give us coverage for those things. Okay. We may be able to get financial aid to help us pay for Obamacare plans, and this is usually the case. If we're dealing with some limited income, let's get on the marketplace. Let's do an application, indicate how much you make, and let's see if they're going to give us some money to help us pay for the plan. Okay, everybody that has an Affordable Care Act plan at the moment, We're more than likely going to keep it unless for some reason you just want to do away with it and you want to go with an alternative for various reasons. We can do that. But anybody that's on there right now, if we're getting financial assistance, then we need to renew the policy, make any corrections, any changes, like changes to your income, your employment, your residency. Let's make those changes. Let's update them, and let's get new financial aid for 2019. Now, premiums are going up. That's no secret. It's like they've been going up every year since the inception of the Affordable Care Act, right? And this year's not going to be any different. The good thing is when premiums go up, so do your subsidies. So if you're still making the same amount of money and the premium has gone up for next year, most likely your financial aid will go up as well. Okay, but we just have to get in there and we have to do the application and see what happens. Okay, with Affordable Care Act plans, preventative care is covered at 100%. So those annual checkups, those physicals, those routine well baby or children immunizations, if you're at that age where they require you to do a mammogram or a colonoscopy, anything that's coded preventative is going to be covered 100% by the Affordable Care Act plans. Okay, that's number one. Again, the rates for 2019 are not available yet. I think last year they came out around October 23rd. That's the same day I actually made the video. But for sure, we won't know the new premiums for ACA plans until November 1st. Okay. So what I want to do now is just give you an idea of Affordable Care Act plans and what we try to do when we're getting subsidy, when we're getting financial aid. Okay. So let's take a look at Health Sherpa here. We're taking a look at a family size of 4. Okay, in my zip code 60133, DuPage County. Husband 48 years old, wife is 45 years old, daughter is 13, and son is 11. And obviously nobody is a smoker. If you are a smoker, then unfortunately, it's the insurance companies can rate you up for being a smoker. Okay, so let's say this family is making altogether $99,000 a year. Okay. It says here that they are not eligible for any kind of financial aid. So the government says you make enough money to afford your own premium, you got to pay the premium. You got to pay the whole premium. Okay, there's no financial aid that we're going to give you. So starting from the top, the most affordable Blue Cross Blue Shield plan is an HMO plan with a very narrow network, and the premium is $1,400 a month, $1,405 a month. Okay. Now, let's assume that this family makes $98,000 a year. This makes a big difference to their eligibility. It's saying now that they're eligible for $856 a month. And look at what it does to their monthly premium now. Okay? So one, if we think we're on limited income, if we think we may qualify for financial aid, then let's jump on the calculator, let's figure it out, because we don't want to leave this kind of money on the table. Because if we don't take advantage of it, no one's going to use it, it's just going to sit there. So we might as well check and see if we're eligible for this financial aid. Okay? On the flip side, I mean, we have to be careful with this as well, because, you know, if we indicate we're making $98,000 a year and they give us the full $856 a month, but we really make $99,000 a year, then at the end of the year when you do your taxes, well, at the beginning of the year when you do your taxes for 2019, they're going to want to square up. They're going to say, listen, we paid you some financial aid, you made too much money, you owe us some of that money back. So they're probably going to get their money in some way, shape, or form. I don't know if they send you a bill or they draft it from they take it from your refund check. I don't know, but they're going to say, listen, you owe us this kind of money. Okay? On the flip side, if we say $99,000 a year and we really make $98,000, then we're probably going to get a big old refund check with because of the tax credit that we didn't take advantage of. Okay, but the only way we're going to get that tax credit is if we do a plan through the marketplace. We can't do a plan privately and then the numbers work out in our favor when we do our taxes, they're not going to give us that money for subsidy. We're only going to get all that if we go through the marketplace. Okay, so this is something that we're taking into consideration. We'll talk about this a little bit more in detail, how this compares to some of the alternatives. Okay, so now let's talk about the first alternative, which is very popular. I sell a lot of these plans because it's right for a lot of people, but it's not right for everybody. Okay, short-term medical plans. Now, what is a short-term medical plan? It's just that, by definition, it's going to give you insurance, medical insurance, for a certain amount of time. After that time runs out, then they're going to stop giving you coverage. Okay? Short-term medical plans will not cover pre-existing conditions. They do not cover maternity, and they do not cover mental health. Sometimes we have to answer some medical questions to be able to get these short-term medical plans. Okay? If we can get past the medical questions, great. They'll give us the health insurance, but they still will not cover us for pre-existing conditions. Okay? If we can't get past some of these medical questions, like they ask us if we're dealing with COPD, diabetes, cancer, surgeries, anything like that, they're going to tell us, you know what, we can't, don't even bother filling out the application. We're not going to give you the policy. Okay? So we have to answer some medical questions. We have to send it off. We have to cross our fingers, and hopefully they let us into their healthy group of people, into their club. Okay? So as many of you might remember, with these short-term plans, there was a ruling that came down that said you can only get these plans 3 months at a time. Okay, so every 3 months, most of the time every 3 months, we would have to get back with each other. We would have to renew the policy. Basically, not renew, we would actually have to get the policy again. We would have to qualify all over again, answer some medical questions, do the application, and just get it again. There were some carriers like National General that were giving us the opportunity to purchase multiple 3-month plans at one time. So essentially giving us at like 12 months of coverage. Okay. Now, as of October 2nd, 2018, that ruling has gone away. The government said, let the states decide how long they want to sell short-term plans. What I'm seeing now is that a lot of the states are allowing us to do 360 days or 12 months at a time, and sometimes it's renewable up to 36 months. But again, it's a state-by-state decision. We'd have to figure out what the options are in your state when we get together. I know that for sure, like Connecticut and California, those states have kind of done away with short-term major medical plans. So unfortunately, we've got to try to find alternatives for you guys there. But yeah, the good news is that this 3-month ruling has been done away with. It gives us a little bit more coverage. It gives us more opportunity. Okay. These short-term medical plans can be half the cost of the Obamacare plans, even after adding all the supplements that I recommend, like accident policies, dental and vision, cancer, heart attack and stroke, or hospitalizations. Excuse me. Even after adding all the supplemental plans, the short-term major medical plans are usually half the cost. Okay. One great thing about the short-term medical plans is that these are national PPO plans. If you're in Illinois, you can use your insurance all over the country, California, Texas, Florida. Same thing goes for everybody else. Wherever you're at, these plans have national PPOs. You can use them all over the country. The doctors are still accepting these policies because they're still getting paid well with these policies. On the flip side, on the Affordable Care Act plans, not so much. Okay, so let's take a look at a short-term medical plan with National General. Now, I have a few go-tos for my short-term medical plans. They're National General, United Healthcare, IHC, and HII has a few different carriers that they sell as well. Those are my go-tos. Okay, so that's usually who we're going to be looking at when we're talking about short-term medical plans. Okay, so let's take a look at this same family size of 4 that we were talking about with the Affordable Care Act plans. I like going with the 100% coinsurance just because it comes with a $50 copayment for the urgent care that most of you have. But we're looking to save some money. We're looking to still have health insurance just in case the stuff hits the fan. You know, I would suggest in this case, with this family, a $5,000 deductible, 80/20 coinsurance, and the premium is about $565 a month. That's a lot less than the Affordable Care Act plan that we were looking at earlier. Okay? What I like to do in this case is supplement it with some ancillary products, some accidents, some cancers, some heart attack and stroke, some sickness hospitalization riders. Those things are the number one reasons why most people would ever meet their deductibles and out of pockets. So why don't we add on a few bucks to the policy and make our policy that much stronger? If one of those three things were to happen, then we don't have to worry about our deductibles and out of pockets. Okay, so in this case, let's take a look at family with some kids. Let's take a look at, where are we at? So if there is some cancer, heart attack, or stroke history in the family, I suggest we go with this policy here, a $5,000 plan enhancer that will cover our deductible in the event that we have an injury, accident, cancer, heart attack, and stroke, or we're an inpatient due to a sickness. So inpatient means that you're actually admitted into the hospital. So pneumonia, something like that, or you're having a surgery due to a sickness. This policy for $101 a month will cover our total financial exposure in the event that we have one of these three. Okay, you guys know my story. I told you my story about fracturing my ankle playing volleyball. I had an accident policy. It covered everything. The only thing that I had to pay was this $250 deductible. Okay, if you're not worried about this cancer, heart attack, and stroke, then this one is perfectly okay. $5,000 deductible, $5,000 benefit for injuries and sickness inpatient hospitalizations for 77 bucks. Okay, still adding those, we're coming out way ahead versus the Affordable Care Act plans. Okay, so now let's take a look at option number two. Option number two is what we call fixed benefit or indemnity plans. Okay, what are fixed benefit plans? Well, by definition, it's a fixed amount that the insurance carrier will pay for their stated service. Think about walking into a restaurant and on their menu there is a list of items, and to the right there is a list of prices, right? Well, fixed benefit plans will say the same thing. To the left there'll be their list of covered services, and to the right it'll say how much they'll pay out for that service. Okay, and that's it. No more, no less. They're going to pay out what is on their menu. Okay, good thing about fixed benefit plans are that this is the only policy that I know of outside of an Affordable Care Act plan that I can get you, and if something were to happen to you, something catastrophic, cancer, heart attack, stroke, therapy for 2 years, this is the plan that I can get you that you can keep. This is permanent. So the short-term policy is going to expire after a certain period of time. A fixed benefit plan is not, and they'll continue to pay out benefit depending on what their benefits are on the policy. Okay, so we'll look at some here in a second. There's no deductible. They pay first dollar right up front. Okay, so I'll show you an example here in a second. Okay, fixed benefit plans will cover pre-existing conditions after a year, and it usually is for hospitalizations and other things, but they won't for the first year. We still have to answer some medical questions. We have to see if they'll give us the policy just like the short-term plans. Okay. The downside to fixed benefit plans is that, contrary to insurance like short-term medical or Affordable Care Act plans, these plans do not have what we call in the insurance world a stopgap. There is no limit as to what you can pay. Okay, so this is the downside, and we'll go over that here in 1 second. Okay, let's look at an example of one of my favorite short-term medical plans. So this went away. Give me 1 second. Let's get in here again. Not let's take a look at one of my favorite fixed benefit plans. I'm sorry, not short-term medical. So let's plug this in again. Let's say DuPage County. Okay, I believe the birth dates were 1973, 1970, 2007 was it? Yeah, 13, right? Or no, excuse me, 2005, and then this one was 2007. Okay, so United Healthcare has a fixed benefit plan called the Health Protector Guard, which is my favorite. Now, the major difference between these three is the hospitalization benefit per day. Okay, this is how much money they're going to give us every day if we're admitted into the hospital. Okay, my favorite one is the 3,000 because these plans are usually written up so that they're, in normal cases, we don't have a lot of financial exposure. It usually covers most, if not all, our financial exposure. Okay, so let me tell you how this works. If we were hospitalized and in the hospital, it costs us $3,000 a day to be in that hospital. Well, this plan is going to write us a check for $3,000, and that's it, right? You're not going to have to pay anything because the insurance company covered the rest. Okay. With this plan, if it costs us $3,000 a day to be in the hospital, these guys are going to send us a check for $5,000. We're going to pay the $3,000, and we're going to pocket the rest, right? Or they're going to send us a check for $5,000. You're going to call the hospital and negotiate that $3,000 down to $2,000, and you're going to pocket the rest. Okay, they're always just going to send us a check for their covered service. Remember, they have a menu, and they pay out what is on their menu. Okay. Now, let's talk about some other things here. Something that's more common here is that it pays us $100 per office visit. Now, if you go to the doctor and the doctor charges $150 for his office visit, okay, what's going to happen is that bill is going to be sent off to United Healthcare or your insurance company, and they're going to give you what they call a network discount. Your insurance company has a contract with the provider that you went to, and they have negotiated their rates for their services. Okay, so let's say they knock that bill down from $150 to $90. You're gonna get a check for $100. You're gonna pay the doctor the $90, and you're gonna pocket the $10. On the flip side, if they knock it down to $120, you're gonna use the $100 check that they sent you, and then you owe the doctor $20. Okay. In most cases, it makes sense for you to assign payment directly to the doctor, but in some cases, it may make sense to just have them send you a check and you square up with the doctor. In my personal opinion, if you can take the extra step to get the check sent over to you, and you square up with the doctor, you can always negotiate what you owe to the providers down after the network discount. Because the truth is, a lot of the times these doctors would like to get something rather than nothing, right? So this is something that I definitely recommend for you. Again, the reason why I would suggest going this route on top of a short-term medical plan, let's say, is because this is the permanent policy. No one's going to be able to take this away from us if something were to happen, if we were diagnosed with something. Okay? So this is an example. We'll talk about this option as well when we get together. All right? option number 2, or option number 3, is one of my favorites. It's minimum essential coverage plans. A lot of my clients, a lot of you guys are on minimum essential coverage plans. Now, what does this do? In 2018, it helped us comply with the law, meaning it helped us avoid a tax penalty. Okay? For 2019, that tax penalty has been suspended. So there's nothing we have to do. If you went the whole year without insurance, they're not going to penalize us. Okay? What it does do now, or what it's going to continue to do, is it's going to give us our preventative and wellness services covered at no cost. So there are 63 items under the Affordable Care Act that say our preventative and wellness services. These preventative and wellness services are going to be paid for 100%. What I can think of up front are your annual checkups, your physicals, some of the kids' immunizations. If you were at that age and you needed a mammogram or a colorectal screening, these kind of things are going to be covered 100%. Okay? Things like contraceptives are also going to be covered 100%. Okay? Now, minimum essential coverage plans have coverage for pre-existing conditions, maternity, and mental health, but it's limited coverage. I wouldn't suggest getting one of these plans if we had some gnarly, full-blown pre-existing condition or maternity, or we needed some mental health. If we maybe had diabetes and we went to go see our doctor twice a year, then that's fine. We can use these co-payments to see the doctors to take care of that pre-existing condition. But if we fell ill in the hospital, it would do us no good. It does give us some prenatal visits covered at 100%, but again, it's not going to cover the maternity, the day of the birth at all. Okay? And mental health services, you can use the telemedicine benefit to, I believe, tap into some mental health providers. But again, if we're dealing with some mental health, I wouldn't suggest going with this plan and this plan only. Okay? Like I mentioned, it does have limited office co-payments. We'll talk about that here in a second. It comes with telemedicine, which is great. And the best thing is that it covers a lot of prescription drugs. And if we're interested in this, we'll talk about the options, what kind of medications they do cover. It's usually tier 1 generic medications that are covered 100%. Okay? The most important thing to know is that minimum essential coverage plans are not comprehensive medical plans. If the stuff really hit the fan and we were hospitalized for any reason, this plan would absolutely do us no good. So I don't like selling this plan all by itself, but if this is what you're looking for, we can get it all by itself. Okay? So let's look at an example. My favorite go-to carrier now, it was Avanto Healthcare. A lot of us have Avanto Healthcare at the moment. But now I like Tatanka only because it doesn't charge us the $25 association fee. Okay, so let's talk about the benefits. So again, minimum essential coverage plans, all minimum essential coverage plans are ACA compliant. That's number one. That was a big thing for 2019, for 2018. Remember 2019 that it's been suspended. They give us 4 different MEC plans. The one I like selling the most of is this MEC Plus because it gives us some office visits. So let's talk about this again. Let's zoom in. Again, our preventative services are covered 100%. Our ACA mandated generic tier 1 medications are covered 100%. Okay? If we're feeling kind of sick and we want to go see our doctor twice a year, they'll give us the opportunity to go visit our doctor, and the only thing we'd have to pay is a $20 copayment. If he decides to do anything above and beyond the regular office visit, then that's going to be your responsibility. That's going to be subject to any other insurances that you may have with this plan. Okay? If we need to go see a specialist, it'll cost us $40 to see a specialist. Okay? I recently had a client who asked me about IUDs and how much it's going to cost us. Well, according to Tatanka, that the removal and insertion of an IUD was going to be covered 100%. It's part of the preventative services. and that the office visit was only going to cost 40 bucks. Can you believe that? That whole service probably was going to cost us 1,500 bucks. And the only thing that she's going to have to pay is $40, according to what Tatanka told me. Okay? The other awesome thing is telemedicine benefits. Now, I used the telemedicine benefit for the first time about 2 months ago. I was feeling like poop. Throat was hurting, just feeling sick. It was probably like 1 o'clock in the morning. I'm like, man, I need to talk to somebody. So I called the telemedicine benefit. I gave them some information. They said, okay, a physician's going to call you back in a little bit. The physician probably called me back in an hour. I talked to the physician. I gave him my symptoms. I told him what was going on. He said, okay, I think you got this. Where's the nearest pharmacy? I'm going to prescribe you some medication. And an hour later, I was waiting at the pharmacy picking up my prescriptions. And I didn't have to pay a dime for that visit or that virtual visit, that consultation over the phone. Okay? So many of us that have medications on a regular basis, and you don't want to make an appointment to see your doctors to get your refills, sometimes you can use your telemedicine benefit to talk to a doctor, and you can get everything squared away. Okay? For an individual, it's going to cost us 116 bucks. For 2 people, 156. For 3 people, 196. And for a family size of 4, it'll cost us 236. But we can go with this more affordable, or we can go with this more expensive because it comes with some other benefits. But the number one thing, like I said, is that if the stuff really hit the fan, you see here that none of this stuff is covered. This is only to handle the day-to-day stuff, preventative services, kids checkups, medication, some office visits, and some telemedicine, and it's definitely at an affordable rate. Okay, so that is a MEC plan. Where are we at now? Let's talk about the combos. So as we can see, the Affordable Care Act plans for a family size of 4 was going to cost us about $1,400 a month. Okay, what I like to do is I like to package all these plans together to make the strongest plan possible. Okay, so we're going to be looking into short-term plans. We're going to be looking into comboing it with fixed benefit plans, because these are the permanent policies. We're going to look at throwing on a minimum essential coverage plan, because we want our preventative services and we want prescription drug coverage. And we're going to talk about all the ancillary products like dental, vision, accidents, cancer, heart attacks, and strokes. Okay, so again, sometimes the strategy is going with the very highest deductible short-term medical plan to keep the costs down, and throw on a good fixed benefit plan, because the fixed benefit plan is going to pay the first dollar coverage for the services. So it's usually going to help us pay our financial exposures on the short-term major medical plans. Remember that we have deductibles on these short-term medicals. These policies will swoop in and save us from a lot of that responsibility that we have up front. Okay? We need the short-term medical plans to give us a stopgap, to stop the bleeding in case something really bad happens. That's why we have these plans. These are the medical plans, the reason why we get health insurance, just in case the stuff hits the fan, so that we don't have to sell the house, file for bankruptcy, or whatever, right? We want something that'll help us manage the $100,000 accident, or the $500,000 cancer treatment, right? And then again, we're throwing on the MEC plan to take care of our day-to-day stuff. This is usually the route that we're going with. Okay. So what else? Let me show you this chart here. So many of us have seen this chart. I've explained this chart before. You're going to want to take a look at this, maybe put this thing on pause. There's a reason why we would go the Obamacare route. It satisfies the government's requirement to have health insurance. Again, this part is going to be suspended for 2019, so it really doesn't play into anything. But we need to go ACA because it's guaranteed issued if you want that. It covers pre-existing conditions, maternity and mental health. It's required to give us prescription drug coverage, and it gives us our wellness and preventative covered at 100%. But what's the downside? The downside is that it costs an arm and a leg. Sometimes it rivals mortgage payments. Okay, they're not nationwide coverage. They're only nationwide coverage if it's a life or death emergency. But don't expect to be visiting somebody in another state, or God forbid you want to go to the cancer center at MD Anderson and you're living up here in Illinois. It's just not going to happen, right? You're limited to the doctors and hospitals that are in your area. This is usually the hardest thing to overcome. We have clients that they don't care who they make their premium payment to. They just want to see the doctor that they've been seeing their whole life. And a lot of the times the doctors are jumping ship from these Obamacare plans because they're not getting paid well. Okay, but if we can find the doctor that you're looking for, we can get the financial aid. We have some gnarly pre-existing conditions. We need maternity. We need mental health. Let's go this route for sure. Okay. The non-Obamacare plans, we talked about that here. The main things are these, that they don't cover pre-existing conditions. Not everybody can get them. It doesn't cover maternity and mental health. Not all of them cover prescriptions, but there's a way out of that. Okay, with minimum essential coverage. But if you need something here, then we're going to go here. We're not going to go with a short-term major medical or a fixed benefit plan. Okay, but what are the good sides? They're usually half the cost, and they're nationwide PPO plans. Okay, and usually putting these plans together make the plan that much stronger. It limits our financial exposures greatly versus just having an Obamacare plan. Okay, we're always going to talk about throwing on the ancillary products like accidents, sickness, hospitalizations, and cancer, heart attack, and strokes. We'll figure out how much that is when we get together. And then we're talking about dental and vision. Everybody wants dental and vision. The longer you have a dental policy, the more benefit you're going to get from it. Okay, vision benefits, if obviously you have glasses or contacts, vision is totally affordable. Okay, so if you want, you can stop and just kind of take a look at this chart, but we'll talk about this more in detail when we get together. Okay. So what are you going to want to have for our appointment? The usual, all the stuff, birth date, social security numbers for everybody that's going to be covered. Okay. I want everybody to start thinking about what your estimated gross taxable income is going to be for 2019, especially those that are already on Affordable Care Act plans through the marketplace, or if we're considering an Affordable Care Act plan, we want to take advantage of the subsidies if they're going to be available to us. Okay, so take that into consideration. So start thinking about what your gross taxable income is going to be for 2019. You're going to want to have your doctor's names so that we can check the network availability. Again, everybody usually doesn't care. I mean, a lot of people don't care who they're making their premium payment to, whether it's Blue Cross or United or Humana, Aetna, whatever, Joe's Chicken and Waffles. They don't care. They just want to make sure that they can see the doctor that they've been seeing their whole life. So have these ready, doctors and hospitals, and the city that they practice out of. Have your payment information ready. After every application, they're going to ask us to submit payment with the application, checking account or credit card or debit card information. Okay. I want everybody to be by their computer so we can do a screen share. I do this with 99.99% of my clients. It just makes everything 100 times easier. So be in front of your computer. If you can't get in front of a computer, then go to your app store. Oops. Go to your app store and download the app Zoom.us so that we can do a screen share on your smartphone, and you'll better understand. If most people are like me, where if somebody's trying to teach me something, and if I can see it at the same time somebody's trying to teach me it kind of sinks in a little better. Okay, so guys, I hope this helps. The video is a little bit long, but it's worth it. It's going to give us a head start on everything. They're only giving us 45 days to knock all this out. I have hundreds and hundreds of clients. We need to get you on my schedule as soon as possible. Have all these things ready, and let's get this thing out of our hair for 2019. Again, at the end of this video, there's going to be a link somewhere at the bottom on the webpage somewhere. Click, make an appointment, an hour appointment, and let's get everything knocked out. guys, I totally appreciate you guys giving me the chance to be your insurance agent. I hope I'm doing a good job. If I'm not, let me know. I'll fix it. Whatever needs to happen, we'll fix it. We'll fix it together. But I look forward to talking to you guys, and let's get together soon. Bye bye.